I do think raising rates is detrimental at this point of view. I think what we've got globally is a serious amount of debt. And what happened post-World War II when debt to GDP was over 120%, they let inflation run a little bit above average over the next 5 years post-World War II. So we borrowed a lot to fight a visible enemy. In the coronavirus pandemic, we borrowed a lot to fight an invisible enemy. But they let inflation run between 3 to 5% from 1948 to 1953. And it brought debt to GDP down from over 120% debt to GDP to 63% in just 5 years. It actually bottomed out years later at 33%. And I think that kind of playbook would work extremely well. And so far, intentionally or unintentionally, that's the playbook that's playing out. So they'll talk 2% all day long. But even in the early 50s, they didn't let that Fed funds rate actually get above 3%. They let inflation run at 3 to 5, and that was very successful. The 50s was a big boom time post-World War II. They were able to get the debt down largely by inflating their way out of it, and I think that strategy is going to be okay. Moderate, but they've got to pin those long-term expectations down to 2 so that behavior doesn't change, and we can have as successful a run in this decade as they did post-World War II in the 1950s. So I would say expect continued guidance to 2% and expect actual inflation to run slightly above trend, but not out of control.